All right, welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, July 8th. Mike Boutros here with you guys. Good morning, Eileen, to everyone in the room. Uh, Nano, Shafiq, Tiffany, Ty, Vesk, Mark, always a pleasure to see you guys. So, a lot to talk about. We have some nice setups in play. Broadly, the three setups, actually all three that were highlighted on yesterday's intraday scalp update are also in play. But let's kick off this session by looking at relative dollar performance. So a quick reminder, today at 2 p.m. we do get the release of the FOMC minutes from the latest policy statement, or the policy meeting rather. Not really expecting the market to show too strong a reaction. Remember, all this Greek debacle, at least to the prefaces that it's reached, was not factored in at the last FOMC meeting. The crisis, which seems like it's going on in China, I don't know if you guys saw that, but trading was halted yet again. PBOC coming out with strong remarks here about the sell-off they're seeing there in stocks. So that's another major global or macro rather economic event. And in light of that, I really don't think that we'll see anything that's too telling. At the end of the day, guys, as we said here months past, it's going to be very difficult for the Fed to try to justify any type of normalization, tightening, quote unquote, as the markets go through this turmoil, right? So it's going to be interesting to see how the market reacts. Obviously, the dollar, looking at it today, you can see that we have a split performance, strong performance overnight in the yen, Kiwi, and the euro, with a push higher in overnight trade. Swissy, CAD, Aussie, British pound, biggest loser on this session. We warned about the British pound on yesterday's radar charts. I guess we'll start off with that by taking a quick look. But basically, where is it? There it is. We had broken below a near-term support. And remember yesterday we were talking about 154, 54.19 ended up being the low that we actually caught back from the start of June trade. Long story short, below this region, you're still at risk for the pound. Broadly looking for a turn, but haven't really taken anything on it yet. Yesterday we were long British pound and short dollar CAD during U.S. trade, so we'll look at those setups in a moment. But on the dollar, here's what the dollar index looks like so far to start off the session. So we talked about yesterday 12,008. That completes an exact 100% extension off the low, two equal legs. And we're now back below this median line, or at least trying to test it. The daily chart momentum coming into 60, and this is something we noted yesterday as well. Remember, all those last times we checked 60, it held, checked 60, it held. Early June was a perfect tag of 60 before we turned. Here we are again. So not really looking to take any long dollar exposure still, and we'll be looking to see if we find any turns here on the greenback, at least on the index. That being said, the euro long has been the play. The dollar yen short has been the play. That hasn't changed. Certainly losses in the Aussie and even the pound have continued to prop up the index. So we want to keep in mind we don't want to take a blanket approach on the dollar based on this index. Remember, it's equally weighted euro, sterling, Aussie, yen, right? Doesn't necessarily mean that all four of those currencies need to be moving off. It so happens today, again, if we look at relative performance, that losses in, or gains for the dollar, I should say, against the pound, against the Aussie, have continued to outweigh, the losses that you've seen against the euro and the yen. So still keeping this afloat, but something to keep in mind here on relative performance. On the 30-minute chart, which was also highlighted in yesterday's radar chart, looks like this. Okay, so we were looking at that 12,008. Here it is on the 30. And we've continued to muddle sideways here since Asia trade. So there's not really many trades that you can take here on the index, but again, we like to use it as more of a broader barometer of what base dollar movements are doing. Any questions on the index before we move on into the actual scalp setups? All right. So let's jump into yesterday's update. First thing on tap is the dollar yen. So we talk the dollar yen on the daily. Well, I guess there wasn't much telling on the daily yesterday. The intraday chart, we were trying to make another break below 122.33, 122.38, and that was really the support that we've been looking at. We tagged it in trade yesterday before breaking below. We caught the exact 22 handle. We rallied back above, but the momentum signature was very steady to hold that 60 level, and that's a tell, okay? Here's what it looked like yesterday on the intraday charts. Dollar yen on the daily. There's that key level between 121.53 and 121.83 on the daily chart. 121.83 actually represents the highs that you made for December. Okay, caught pretty nicely that March high. We overshot a little bit. It was the origin of the breakout that we saw in May. And again, confluence with the lower median line. This is a sliding parallel, and that confluence break keeps us looking lower below this region. So it's essentially the 22 handle, guys, and that's what the bearish invalidation level today is going to get reduced to. We're going to lower that down from the weekly high right down to that 122 handle. Here's what it looks like on the intraday. Dollar yen. All right, so a pretty clean play. If you look at the 5-minute triggers, which I'll bring up in a moment, there were plenty of triggers here across the board. Momentum on the rally in U.S. trade yesterday, or into the close or start of Asia, I should say, found resistance right at that 60 level. The second rebound, okay, yesterday, again, finding resistance right at 60. Here's where we're trading yesterday as we were writing this piece, okay, or actually, excuse me, during the webinar, and that rally fizzled out in U.S. trade, again, giving us a downside move past the 122 barrier. Here's what the 5-minute charts look like, okay, for the dollar yen. So you had that opening range for Tokyo, real tight, nice resistance, or support break rather, in momentum. Stop against the highs. You're looking for about 23 pips per scalp. That panned out well. Yet another momentum trigger here after momentum failed at 50. It's a 3-point trigger. The more touches, the more conviction you have on the signal. And here's the one thing I just wanted to note, guys. A lot of these trades, and I'll show you on the sterling and the dollar CAD positions we took yesterday, but a lot of these trades have been giving you ideal entries, meaning once you get the trigger break, and once you get the break in price, market comes back, tests that same trigger as resistance, and that's your opportunity to get back in. Stop against a high, you look to press it lower. So there's been plenty of opportunities here. There's no signals right now that I'd be comfortable taking, I want to say. But near-term support, if you're already in the trade, rather, you're looking for 121 handle. That's the exact 100 off the high. And then you're looking at confluence support a little bit lower here at the 786. Soft target at 120.65, but this is going to be a little bit more critical of a region. And we'll maintain that bearish approach below 122. Okay, so again, on the spike for the open or the gap, we filled that gap. Remember, we talked about this throughout the course of the week. Using that gap range as an opening range in and of itself keeps the focus weighted to the downside. Raj says, Mike, remember Sterling Key we talked about yesterday? It broke the pennant. Happy days. I managed to short it. Nice move, Raj. Remind me a little bit later in the session. We'll take a look at that again. The Sterling breakdown, honestly, I mean, I wasn't a part of it. I was actually on the long side of the pound yesterday, which panned out well. But, yeah, that broke a major level, and as long as it stays below, you could see further Sterling losses. So we'll go over that trade again just in a moment, Raj. Any questions on the dollar yen before we move forward? Still looks pretty good. We'll be seeing if anything forms here in U.S. trade. This would be a trigger some of you might want to look at, but again, I don't like using triggers when they're on divergence. So here's the low in price, a lower low in price. Here's a higher low in price. Typically, I want to be using triggers off of the low in price. So we need another low to get on board here. Still looking to sell rallies as long as we hold below 122. All right. So that's the dollar yen. Moving right along. Next trade on the update was the euro dollar, and that's another one that panned out rather well. So if you remember, the previous post had 109.50 as our near-term bullish invalidation level. You had that 786 retracement off the low. You had the median line parallel off the high. And as long as we stayed above this region, we still wanted to be looking for long scalps, right? Well, you got a spike yesterday that drove below it. The opening range for the U.S. trade took us right back above it, and that invalidates, okay, or I don't want to say invalidates the invalidation, but it puts the long side back into focus, okay? And actually on that decline, you had some really clean divergence. So price action making a lower low, the oscillator making a higher low, followed by a trigger break. Again, that wasn't a very compelling trigger break in price, so I probably wouldn't have worked with that one. This one, however, was the play. And once we broke through the US opening range back above 109.50, back above the median line and the trigger break, you're looking higher. Now, one thing I noted yesterday in the update, and I just want to bring to your attention still, is that momentum hasn't been able to clear 60 still. So while we are favoring the long side on the scalp approach, we still need that conviction break above 60 to really get the validation for a near-term turn here in the dollar, in the euro dollar rather. Okay, so cautious on the longs, still trading about a quarter or half of typical lot sizes on the euro longs, but looking for that break above 110.50 to really validate a near-term turn. I added on here yesterday, this was on Jamie's chart, this sliding parallel, but a couple of sliding parallels actually form to hold price action pretty well. Okay, the broader breakout is going to be this region here, which is going to be the larger encompassing pitchfork we're in. But near term, we'll be looking for that break above 110.50 in US trade to validate, again, the turn here in the euro. Okay, still looking to buy pullbacks while above 109.50. Bearish invalidation level, or the bullish, excuse me, invalidation level has not been changed. Here's what it looked like on the euro for the 5-minute charts. So again, you had a couple of triggers that worked out pretty well here. Here is a trigger in Asia Pac last night. Kicking myself because I missed this one, but again, really nice opening range for Asia, Sydney. Okay, you got that momentum trigger break, came back, tested the trigger as support. Again, on the snapback, long here, stop against the lows, looking for about 32 pips to the upside. You got way more than that. Okay, on the European trade session, you had another trigger right here, which panned out pretty well. Not so compelling from an opening range standpoint because the European Open just was massive, but 40 hold momentum, trigger break, and you had a really good risk to reward on that trigger break, right? 110.17, stop against 110, I'm sorry, 110.22, stop against 110.05. You know, less than a 25 pip stop. Again, you're looking for about 32 pips. So we'll want to see this continue to break 60 on the upside. Again, looking for 60 on the 30-minute to really confirm it. But topside break above 110.50, you're looking for the rally into the gap, which we haven't necessarily filled, and that's 110.96 into 111. Hey, GS, great to see you. Says, hello, Michael. A bit late coining as a listening to the UK budget. I believe in technicals, but sometimes just got to hear fundamentals when you pay local tax, except on FX spread bets in the UK. No worries, GS. Good to see you in the room, man. And it's interesting because actually the data that came out for the UK wasn't all that weak. It was actually stronger than expected. But again, we'll go over that trade in just a moment. Any questions on the euro before we move on? So that test is really, I mean, the first test for that breakout is going to be right here. If we do see that move, again, we'll look to fill that full gap here, but we'll want to see momentum really break 60 on that 30-minute. So that is the euro dollar. All right, moving right along. Finally, the Aussie key. As usual, guys, if you have any questions or trade setups you're looking at, feel free to drop them on the message board there. But Aussie Key, this was a setup I also highlighted in Daily FX. Really compelling case was for the possible break below 111.60, 111.40. You're looking at the monthly pivot, which you guys know I don't stress too much, but when they coincide or converge with key technical factors, it becomes much more critical. Raj says, is it too late to get in the euro dollar long? If you're talking about right now, Raj, again, well, let me go back to you real quick. If you're talking about right now, yeah, you don't have a trade set up right now. Okay, you need to either see a pullback again to test those lows from Europe. Whoops, wrong chart. And get along where you can put a stop against this low, Or if you get a breakout above 110.50, you look for the pullback, and then you try to initiate a short above that median line, looking for a long above that median line, looking for 111. But from right here, no, I wouldn't be looking to jump into anything right here. Your stop would need to be well away, more than 40 pips away, right? We don't want to do that. 32 pips is the targeted profit. Eileen says, by the way, sound is perfect this morning so far. Well, Eileen, I would be happy to let you know we got a new mic, so I'm glad to hear that. I'm glad to hear that. Roger, more than welcome. He says, thanks, that makes sense. We'll come back to this right before the close of the webinar. I do want to see if we can squeeze something in here. But Aussie key, let me bring up the chart here. On the daily, again, the major pivot here was the break of that support, and you got a clean break of that alongside some nice momentum triggers in the 5-minute chart, which I'll show you in a moment. But, there was a lot to suggest, to be looking lower here, guys. First of all, you had some really key divergence right into the highs. By the way, that high completes an exact 100% extension off the low, almost to the pip. Okay, so you had a nice confluence region there with a basic channel resistance. That's just a slider of this parallel right here. And, you got a trigger break again as well in the daily. So divergence into a trigger break 9 times out of 10. If it's a trigger in a 5-minute, we'll take that. 9 times out of 10, if it's on a daily chart, it's going to reverse our bias, or it's going to validate our bias. So we got that break. We were just looking to see if this holds, gives us a rebound to sell, or breaks. Obviously, hindsight, it's broken. Really nice. There was that key region we highlighted. And just this morning, we added on this parallel. Okay, so if we look at this basic break, that was the key region we were looking for. 40 break in momentum confirmed it. Remember, on the rally, 60 hold, 60 hold. If we tack on a quick, a quick pitchfork here. You can see that it almost caught the lows to the pip here. Okay, so not surprised to see a little bit of a bounce. Look for resistance right here at 110.90 into 110.96. Let's just call it 111. And you continue to look lower while below the upper median line parallel. So the bearish invalidation level stays pat, unchanged, right there at that 1140, 1150 region, which again on the daily chart is this critical region right here. So from a broader perspective, the first major target was 110.95. That got taken out. Next, you want to be looking at that basic trendline support from May. And again, that comes in right around 110.20. I think we noted that on yesterday's piece. Aussie Kiwi, here it is. Right around about 110.30 yesterday. Again, 110.20, 110.30. That near-term support here for the Aussie key. Here's what the 30-minute looks like. Again, we went over this just a moment ago, but soft target at 110.30 again. And then the lower region that might offer a little bit more of a key barrier is 100% extension off of the highs. Okay, and that comes in at 109.96, a little bit lower, right ahead of the 110 handle. Okay, keep in mind one thing, guys, for the Aussie key. The broader turn here that we made earlier in the year looks pretty serious to me. Okay, and I do think that the broader trade remains weighted to the upside for the Aussie key, but near term, we're looking to play this correction. Again, keep in mind those slopes that we were following on the daily chart are really what's guiding price action. Remember that slope off the September low we talked about yesterday came right into that region as well with the pivot, with the lower median line parallel. Okay, so as long as you stay below that, you look for support at this trend line, a break lower. You look for the S1, more importantly, 109.10, the 236, which also coincides with the major slope off of last year's low, or off of last year's early low. Okay, and that, again, coincides right around here. Any questions on the Aussie key? Here's what it looked like on the 5-minute chart. I didn't bring that chart with me. Oops. Well, we can always remedy that. Let's take a look. Ooh, so it looks like a short trigger might have just given out with that move. Stop would need to be against 109. I'm sorry, 110.92, 107.60. Still might pan out. I'd like to see the U.S. opening range give us some play here, but typically, or best bet is going to be your stop against that 110, 111 handle, which is, again, near-term resistance and that Fibonacci confluence. This is a 236 off the low and a 618 extension off the high. So I'd like this to be a little bit more of a major resistance. Invalidations up here. Initial targets at 110.30. You're looking for about 28 pips per scalp. So we'll keep that in mind here on the Aussie key. Also, even on the 5-minute chart, something to take note of. Okay, excuse me, off the high that we made here earlier in the session, even on a 5-minute chart, the break that you made lower, resistance ahead of 60, 40 break, resistance ahead of 60, continue to look lower in price. So Kyle says, where would the target be? So again, the targets are going to be unchanged, my man. They're right here on the intraday chart for you. Oops, where are we? They're right here on the intraday chart. All these are the same targets, right? So your initial target to the downside would be 110.30. Essentially the median line. This was just an estimate of where that median line would be. So this is going to be your first target. Depending on time, you're still looking at about 110.30. And then right below 110 is going to be the next major, at least from a Fibonacci standpoint. That's what I'd be looking at. So I hope that helps, Raj. Again, if you look at most of the trades, guys, the U.S. opening range hasn't really been breaking till later in the session. Maybe not in this pair. Here's a 9:15 break yesterday in Aussie Key. Here's a 9:30 break the previous day for the U.S. opening range. This opening range didn't even break until 11 or right around noon, and that was a false break. So you just want to be careful about taking pre-market open trades, at least from a scalp standpoint. But that's the general direction we'll be looking in on the Aussie Key. Any questions on this setup before we move on? Personally, haven't operated on this yet. That was a beautiful trigger here yesterday with that break, even on the 30. Not the most compelling trigger per se, but the 40 break in and of itself alongside a break of the major key support we were looking for. Stop for the opening range was for Tokyo wasn't too far off, 1165 here. So it actually offered a really nice break in price. So I got a question here. It says, so what are you waiting for in this pair to go short? So I'll be looking for the U.S. opening range. I've actually had my attention more focused on the sterling, the CAD, the euro. So I haven't, like I said, I haven't personally placed any trades on this. But what I would be looking for is the U.S. opening range to set up. We might spike into a high, test this again, and then look for a break to the downside to give us a stop against that, or at least a little bit more of a compelling momentum trigger to get in. Again, remember, the momentum trigger in and of itself doesn't do anything, guys. All we're looking for in momentum is for it to validate a break in price. So we got a trigger break here. It's only a 2-point trigger. Nonetheless, if there was some divergence on this, it would look a little bit more compelling. If that break of the trigger was accompanied with a break below the U.S. opening range low, which we like to start at 830, that would work too. But you haven't gotten a break in price alongside the momentum signature, so that's not something that would be an operable trigger for me. Does that make sense, Raj? So to open up the U.S. session, if we hold a nice range here, we see a downside break with a trigger, that would be something I'd be interested in. If we see a rally, we break through, I'd be much more interested in looking for a short around the upper median line parallel against that major key resistance. And that would be a nice play to the downside as well. So we want to make sure that we're just, picking and choosing our entries that are going to be most beneficial. And it's always going to be in your benefit to take the trade at resistance if you're bearish and at support if you're bullish. So um, the only other thing that we want to take into account is time, Raj, right? So make sure you know where you are sort of in the sessions. Raj says, yes. All right, cool. Mike, did you look at dollar CAD? No, we will do that in a moment. So we've cleared all the setups that we were following on the intraday update from yesterday. Dollar CAD, again, we wrote about this here on the radar chart yesterday. Yesterday I was on the short side of this. So let me show you how that panned out. So here's dollar CAD on the daily. And then we'll jump into the pound metrics too on the near term. That's very interesting. So yesterday, this thing wasn't quite this high. We were trying to push through the 27 handle, 27 and change. We talked about 2770, 2780 on the near-term chart is also a 618 off the low. I'll show you that in a moment. But a big region, guys, a big region. And part of the apprehension here for trying to participate in any type of long exposure is this basic trend line off the 2002 high. It's a 3-point tag. Okay, we touched it earlier in the year here in March, tried to break through, that failed. Now that same trend line coincides with the 100 off the low, and just above it, the median line off the May lows, also there. So momentum still has a little bit more room before 70, so you might see this thing stretch a little bit higher, but broadly speaking, this is a big region. If you do see a break, look for resistance right at 128.40, 128.33. That's basically just the high that you made for the year. And a longer dated upper median line parallel off of the lows. This is a shift formation. Okay. Add to that the median line off the low from this year. So you have a three-way confluence up here at 128.33. But the trade remains at risk near term below this region. Okay, and here's what it looks like on the 30-minute. All right, so this actual chart was posted on the previous day's radar charts right here. Okay, if you remember on the Sunday update, or I believe this was on the 6th, this was on the Monday update, we talked about that region. I was actually looking for short exposure from right here. Didn't get any short triggers, and in fact, you got a trigger break to the upside, which cleared out that divergence we were talking about as price action was pressing higher. So that invalidated, again, a break to the upside. Your initial target, as noted here, was right around 127.80. The high was 127.78. Okay, so now you look for a little bit more of a turn. Below this region, the rallies are at risk. From a momentum standpoint, you don't have any breaks below 40 still. Okay, so you have to keep that upside in focus. But remember, nothing supersedes basic support and resistance. And right now, it's an uptrend at resistance. Short at your own risk, but basically, it's at resistance. What we would need to break to clear the upside bias would be the lower median line parallel. So from a price standpoint, that's what you need to clear sort of to get some traction back on the short side for dollar CAD. As it stands right now, like I said, it's an uptrend at resistance. Here are the trades we took yesterday. And again, obviously after 5 o'clock, all the arrows clear out for the previous trades. But I just want to show it to you because it worked out really well with the U.S. opening range. So as we opened trade yesterday, again, dollar CAD, here we go. As we opened up trade yesterday in the U.S. session, remember, we were trading just above the 127 handle, looking for that rally to 127.70, 80. There it was, and it happened about 10 o'clock in the afternoon. So the opening range is not going to be anything to do here because the opening range actually broke to the upside, but that was only, 10, 20 pips away from resistance. So although the opening range broke, it's not an operable trade, right? And in fact, we're looking for that resistance to hold. So once that rebounded off, you got a trigger break in momentum here to the, oops, I'm sorry, guys. So once that Trade held that 127.80, 127.70 barrier. You saw that momentum, saw a test of that trigger, which was a 2-point trigger already. That held, right? On the rebound, it broke lower, and the entry was right here. Okay, it wasn't until about 11:30. So you saw the trigger break and momentum give out. We came back to test the trigger break as resistance. That gave you an awesome risk to reward, right? Entry somewhere around 127.65, stop against 127.80, 15 pip stop. You're looking for about 26 pips per scalp. Worked out perfectly. Now, it's funny that we were just yesterday talking about, do you hold on to a trade that might be moving against you, or do you close it out, if the dynamics are changing? And this is an exact example of what you don't want to do, guys. So on the initial drop, yes, we got 20. Yesterday, the ATR was 28 pips, so we actually booked 30 on the way down. And then on the rebound here, I got shaken out. There was nothing in momentum to suggest I should get shaken out. There was no trigger breaks. This was the trigger break I was looking at, although it wasn't really warranted in my opinion, looking at it hindsight, especially because we held 40 as momentum. But on that trigger break, I went ahead and closed out. Remember, a quarter of the trade was taken here. I went and closed out 3/4 here, which obviously hindsight, I'm kicking myself. But that's a trade where you should have brought your stops to break even and just let it pan out. So, um, it's easier to preach than it is to practice, I guess. But same story exists, same setup exists, and we're still looking for that 127.70, 127.80 barrier to see if that's going to offer more critical resistance here for dollar CAD. So didn't take a loss on it, and we did book the initial 30 or 28 pips was the ATR. 30 is what we took on a quarter of the position. The rest was taken out like a 3-pip profit. So we'll look to see if we can reinitiate that today. But I just wanted to show you an example of where the opening range doesn't serve you well, but still the momentum breaks will offer some clarity on that. And you were getting divergence all through the rally into the highs. Higher high in price, lower high in momentum. Higher high in price, same high in momentum. Higher high in price, lower high in momentum. Divergence into a trigger break, 9 times out of 10 we'll take that. All right. So something to keep in mind there. Who makes more pips? Mike, you or Jamie? It's not a competition. We don't, Jamie does his trading, I do my trading. The only thing we discuss is biases and levels. Trading is a very personal thing, guys. And that's one thing, when you go to a trade desk or when you're working in a professional environment, the guys who are really serious with this business aren't the guys who are always talking about their positions and flabbing off whether they've done bad or good. You have to take everything in perspective. And if you're trading with emotion, it's going to be against you. So for me, I keep my head down and I'm just trading, and Jamie does the same exact thing. So Alan says, good morning, Mike. Thanks to SB, I'm using the US dollar index as an additional source of data. If we're charting the dollar alongside our trade levels, does dollar price action ever contradict the pair price action, assuming we're trading the pair, a dollar pair? I'm assuming a lot depends on the respective support resistance levels between the charts. I need coffee. So Alan, we talked about that right at the beginning of the webinar, right? Just because the dollar index is moving higher or lower, it doesn't mean that all 4 component currencies need to do that. And in fact, today's a perfect example, right? We're looking higher on the euro, we're looking lower on dollar yen. That's, a contradiction to what you're seeing with the dollar index being higher today, right? The dollar yen, we're still favoring the short side, even though the index is moving higher. So what I would do, Alan, is definitely keep your eye on the dollar index. It can be a great barometer for base dollar movements, but you want to look at the relative performance on the session. So just because we're seeing extreme weakness in the Aussie or extreme weakness in the sterling, that could skew the dollar index, right? Doesn't necessarily mean we want to be bullish the dollar against everything. And every trade, it's taken on its own merits. Exactly, Alan, what you were saying earlier. Every trade is taken on its own merits with support resistance level. That is across the board. I don't care whatever correlation you're looking at. So, Alan, I hope that offers a little bit of color to your question there. Let me know if I can be more specific, but yeah, at times it does contradict price action on the pairs, and that's like I said, today's example of the dollar yen moving lower while the index is moving higher is a perfect example of that. All right. Deepesh, welcome aboard, my friend. Says, wow, I had a real issue logging in today. Deepesh, if it's your first webinar, sometimes you have to install the GoToWebinar or you have to allow access for the software to launch. But keep me updated if you do have any problems. I think everyone logged in with no issues today. He says the second time, buddy. All right. Well, keep me updated, my man. And Deepesh, I added you last night on SB Trade Desk. I saw your tweet, or I saw your request come through. I went ahead and filled out that SB Squawk forum for you, so you should be all good to go on Twitter. Welcome aboard yet again. Manuel, welcome to you too. Good morning. Alan says, absolutely. Thanks, Mike. You're more than welcome. Good question, Alan. And something to keep in mind for sure. We don't want to use this index as a blank indicator across the dollar pairs, by no means. But it can be very telling. So Deepesh says, have we covered sterling yen and sterling dollar? If so, can we cover them briefly? Again, I missed it. Deepesh, you came in right on time, man. We didn't cover either. So let's look at the British pound and sterling yen. Any questions on dollar CAD before we move off? Here's a trigger on the 5. We'll be watching heading into the US session here. Remember, this is the major key resistance. The turn, like I said, or what would put us back on the bearish camp would be a break below that lower median line parallel slash that former 100% extension off the low, which has been a nice pivot and actually was really darn close to where we pushed into, excuse me, on the Sunday open in Asia. And even if you do see a breach of the highs, again, I'm not going to be interested in playing it even if you see the breach of the highs just because of the critical nature of this major resistance here through a confluence again at the highs, 128.33. Eileen, did I miss your question? Instead of jumping in right away. Oh, I did. I'm sorry. Why did you wait for the rebound for the RSI until jumping in right away at the RSI break for dollar CAD? Good question. Good question. And what do we always say, right? The most important thing that you want to look for is your risk to reward ratio. So let's review that one more time here for Eileen. Oh, so you're talking about this break. Why did I wait for the rebound? Well, first of all, this is a major key resistance, and one thing you want to note is what are we doing here in dollar CAD, Eileen? We're fighting the trend of the day, right? We're fighting it. It's obviously an uptrend. I don't think anyone's going to look at this and say this is bearish, but you had some divergence. You had that key resistance on the daily, and I was looking for the turn. So for me, when I'm taking a counter trend trade, which this is 100% at this point, I need a little bit more conviction to jump into that trade, Eileen. And second of all, on the actual break of the trigger, on this move here, now my stop is 27.50. The high is 27.80. That's 30 pips. The ATR yesterday, a quarter of daily ATR was 28. So it was larger than my profit target. So I can't take it. Now on the rebound, it held resistance and fixes my risk to reward. Now it makes sense. You hear what I'm saying, Eileen? Nothing supersedes risk reward. Nothing. It's absolutely critical. Now, don't get me wrong. Let's say I was watching a 1-minute chart and I'm super trigger happy and I'm poised just with my hand hovering over the clicker looking to click a short and I got the initial break. More power to you, okay? If you can get that, more power to you. But 9 times out of 10, unless you're really attentive to real-time price action or real-time price action, you're not going to necessarily get that first break. So on the rebound here, all the more conviction to take it. Again, on the back of the divergence, trigger break, now your risk to reward works. It's a beautiful trade. Does that make sense? And this whole process takes minutes in your head, guys. Just a couple of seconds to think it through. Where's my risk to reward? Okay, where's resistance? Done, right? Eileen says, oh, okay, thanks for filling in the thought process. Makes sense. All right. Mike, can you tell me how you have 70, 60, 50, 40, 30 show on my RSI indicator at the same time? Dale's. Hey, Dale. Actually, yeah. I'm sorry. I was reading your question. This is an add-on indicator called RSI2. You can get it at fxcodebase.com. There's the link for everyone to see. And it's called RSI2. This indicator, actually, oddly enough, was scripted by one of the scalp webinar attendees that I had back on Daily FX, who was following me on that front for years. So he saw me always looking 60-40, and I used to add an actual draw, a horizontal line on the RSI indicator. So he went ahead and scripted one that has those built in already. So definitely take a look at fxcodebase.com, and you can actually download that and install it for your market scope. Hope that helps, Dale. Yeah, you're more than welcome, man. All right, so let's jump into the sterling here for Deepesh and for the rest of you guys who have been looking at the sterling crosses. So on the daily chart, if we go back to the Sunday posts right here, we were looking at this region as support as we came into the start of the week. Okay, you're looking at a basic trendline support off the lows. This was a 50% retracement, excuse me, of the advance of just the June range. Okay, and we had already broken below the median line off the lows here. So there's a possibility for this thing to still see further weakness. You had some serious divergence into the highs, right? Price action making a higher high on a close basis. The oscillator making a lower high. Divergence into a trigger break. Now, truth be told, I still wanted the sterling long. And the reason that we took that, I'll show you the position yesterday that we took on the scalp, which did pan out, was on the premise of seeing a little bit of a rebound off of this major key region. Okay, this is bearish, pure and simple. And remember what we talked about yesterday, the major thing I wanted to see hold, even if we did see that break below 154.60, was this long dated median line structure from the highs of 2013. Okay, the median line's just been ridiculous pivots. Ridiculous pivots. You had a couple false breaks here in December to close out the year, but to start off the year, resistance, 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 pivot break, support, pivot break, resistance, pivot break. You'd expect to see some support here. So today's close is going to be paramount for the sterling. If we do close below this, guys, there's really nothing on tap until 52.50. You have the 50% retracement of the 2014 range, so taking into account the entire range for the year. You have the 100-day moving average. And a possible median line structure that could be in play near term. Gives you the median line right there. Okay, so for the pound, broadly looking lower, we'll look to see if momentum can hold 40 on a pull into this region. That might actually be a great risk to reward for a more of a medium-term swing type of trade against the lows. But long story short, you have to stay bearish below this region right here, which is basically 54.60. Here's what it looks like on the 30-minute. So yesterday's trade setup was along off of this rebound here in U.S. trade after we cleared the U.S. opening range high. You also got the 30 break back in momentum. I actually played this one the same exact way. So Eileen, I'll show you in the 5-minute chart, but the same exact way. The trigger break on the pullback, awesome risk to reward. Unfortunately, I took out the entire trade at 54.60. Again, being very mindful of the fact that we're fighting the downtrend. So on an intraday position like that, I don't want to fade out of the positions. I want to kind of, take my trade as I get it. So as soon as we completed that 30 pips, I think we squeezed out 33 or 34 pips on this one, but we went ahead and closed out the entire trade. Good thing we did. Hindsight's, always 20/20. So it looks like, we would have gotten stopped at break even eventually on the pullback. But here's what it looks like on the 5-minute, Eileen. I guess these 5-minute triggers, reviewing them is offering you guys some help. So where was yesterday's entry? I wish we had the arrows on here. Here. So on this trade, there really was no trigger on the 5-minute. I think this was the one I was looking at, but it's a horrible trigger. You definitely, don't want to make a habit of working with these extended triggers like this on the bottoming process. But nonetheless, um, you saw us base right here. Let me bring this forward. We had a soft target at 154.20. Um, whoops. We came into that region. We even drilled lower. I know that the swing stops got stopped out here. It's kind of frustrating, but nonetheless, it was a good stop because it broke lower. In any event, here's the U.S. opening range high. This thing rallied. You saw that trigger break, or you saw more so, actually I remember now, it wasn't the trigger break. It was in and of itself the break of 50. On the last swing, 50 held as resistance. On the pullback, we couldn't make any progress below 40. 50 break in and of itself will oftentimes be a trigger. So that was the trigger. Didn't take the trade until the pullback. Found support, former resistance, great risk to reward. Looking for 30 pips on the upside. The pullback here, your stop is against the lows, got me shook for a little bit, but continued higher. It was a real slow burning trade, guys, that didn't pan out till the afternoon. But the limit at 154.60 did take us out here on the rally into the highs. So there's another trigger. Remember, guys, both of the ones that we just talked about with the dollar CAD short and the sterling dollar long are counter trend trades. And it's just an example of how you can be so dynamic, you can be very, very comfortable with the price action on the intraday, that there's always an opportunity, right? Yeah, broadly speaking, we just went over the daily chart. It's a bearish trade. We broke a major key support confluence. But near term, there's still opportunity to get that rebound. You want to be nimble on these counter trend trades, and specifically, guys, you need to make sure you're maximizing your risk to reward at all times. So wait for the entries. Eileen says, yes, keep doing the 5-minute triggers. You got it. Depeche says, hey, Michael, on your 5 minutes, what are the red lines you're using? These are triggers we're drawing in. They're basic trend lines, Depeche. If you're talking about these, this is an indicator called trade sessions. He says on the chart. Yeah, so you can find this called trade sessions. You can find that one on FX code on fxcmapps.com. So guys, there's the link for you in the chat box. This one's called Trade Sessions, and all it does, Depeche, is it's going to highlight the high and low for each session. It's really important to note, guys, this is not giving you the opening range. For the first couple of minutes or first hour it will, because it's going to highlight the high and low. But this is simply highlighting the high and low for each session. Okay, so the green is going to be your London session, the red is going to be the New York session, light blue is going to be Sydney, and the dark blue will be Tokyo. So it can be much more readily identifiable. I can look at the chart right away and be like, where was the Asia high? Oh, okay, there was the Asia high. Where was the opening range low for London? Boom, there's the London open, there's the London opening range low. So it can sometimes really give you just a quicker gauge on things. All right. Oh, I'm sorry. Are you talking about, he says the trend line. I mean, I think you're talking about this. This is just a moving average. I don't really stress them too much. Actually, the 50 on this 5-minute chart doesn't make any sense. So I wouldn't even worry about that. A lot of times on the daily charts, and this is something, again, I'll just speak about really quickly. A lot of times on the daily charts, I do like to leave some longer term moving averages, because something that you can gauge from moving averages, guys, is momentum. It can be another gauge of momentum. So if you're looking at, let's see, what's a good trade that has a good momentum signature? If we go back to the euro, well, this is not even a good example, but in general, the space between the moving averages, specifically on the near term, can oftentimes be a tell on momentum. And when the moving averages start to converge or start to tighten, the gap between them is telling you that there's a contraction in momentum. Whereas if the moving averages are diverging, one's going higher, one's going lower, that's an indication that momentum is actually starting to gather pace. The other thing I keep moving averages for, guys, are on the longer term charts. Moving averages can oftentimes offer some major support and resistance. So here's the 100-day, again, some resistance, pivot break, support, support. And again, if we close above this today on the breakout, It would give us a little bit more of a conviction trade. I don't use moving averages for trading, guys, so I just wouldn't, I don't want you guys to stress that at all. I'm not a big advocate of trading using moving averages. It's just there, again, if the moving averages converge on major levels. So for all the month of June, remember we were watching this region between 110.55 and 110.65, which is a nice pivot in price here. The entire month, the 100-day moving average is right in that range. So that adds further conviction to it, right? Kyle says, I noticed that you're using 20 periods on RSI. Is that typical for you? Again, remember, we talked about this in the webinar a couple of weeks ago, guys. I usually use 20 or 14. I really go back and forth just to see what has been giving me the clearest triggers, what has been giving me the clearest 60 and 40 holds. As of late, because of the increase in volatility in the back and forth, the 20 has been serving me best across the board. Um, sometimes I'll bring it to a 14, like I said, and if that offers a better gauge, we'll use that. But as of late, um, most of my charts have been on 20, yeah, 20 periods. GS says, Michael, on the 5-minute chart, I thought I saw divergence at 53.90. 53.90, okay. What's your question here? Following the RSI break up about 30 minutes later. I see what you're talking about, but did not work. Was I wrong? 53.93. I think you're talking about, correct me if I'm wrong, by the way, GS. Are you talking about this trigger? So you saw price action make a lower low, the oscillator make a higher low, and then this break right here? Yes. Okay. Why didn't you want to take that? Or saying why were you wrong? Very simple. Remember, actually this addresses a really good point. So everyone in the room, listen to this. So GS, the thing we want to keep in mind is this. These triggers help us get into the entries, right? They don't dictate bias, guys. So again, the reasoning behind trying to fade the move here on the long side, even though we're bearish, was because you were at a near-term support. Okay? If we look at the momentum signature now, yeah, that was a trigger. You're right, absolutely. But 53.90 wasn't really a level that we were watching, right? And we had just broken the London opening range low. So here's your London open, set a low, you test a high, you break the lows, so you're bearish. Okay? If that trigger had found some support at a major level that we were looking at or had mapped out, yeah, I would have tried that. I would have been there with you trying that. But this is no man's land here. This is below 54.20, which was our soft target, and above major key support down here at 53.50. So there's no levels here to trade against. So remember, we're not just blindly following the triggers, guys. It's extremely important. The triggers mean absolutely nothing if the trade is not at a key or even a near-term support or resistance break. Does that make sense, GS? He says, got it. Need to back into support or resistance. Right, right. So if you had that same exact type of divergence right here into the lows, heck, I'd take that 9 times out of 10 too. Right, GS? So I have to have a stop that's at least into this region or at least against the lows or at least into a key support for me to try fighting the downtrend, which is what we're doing, which is what we did yesterday. And luckily, again, on the dollar CAD and sterling, it panned out. It's not always going to do that. And that's why I'm going to be a little bit lighter on the leverage, and I'm going to be waiting for those ideal risk to reward ratios where if I'm wrong, 15 pips, no sweat. Make sense? GS says thanks. All right. Right on, man. Great questions here today, guys. Dollar yen broke down, and I did not add to the position. Wish I did, says Raj. Yeah, should have, would have, could have. If a trader goes back and looks at all the opportunities he's missed, he's going to be a miserable trader, let me tell you. You just got to keep looking forward, man. The market will always offer more opportunities. Um, Eileen says, cool, and I need to put that trade sessions on my charts. Can you let me know where that is again? Eileen, I'm sorry I missed your question earlier. Did you get that link? FXCMapps.com, guys, for trade sessions. RSI is on FXCodebase.com. Ross says, do we have a midweek webinar today? No, the midweek webinar with Jamie, guys, is going to get pushed out till tomorrow. Today at 2 p.m., you're going to get the release of the FOMC minutes. So, Jamie's not really big on event trading, and he's going to want to go over his setups on a broader view. So we're going to avoid those super variable times. Okay, so the midweek strategy webinar, same time, but it's going to get pushed back till Thursday. Hey, Mike, did the Euro yen just get a long trigger? And sterling yen depeche. Okay, we're running low on time, but let's run through those real quick. Euro yen, I haven't really been tracking this one. I know it's coming into a major key support that we highlighted last week. Basically, you're looking at the median line, you're looking at the 50% retracement of the advance off the lows. You're looking at the lower median line parallel for the advance off of the yearly lows as well. I'm not really interested in doing anything here. I definitely don't want to take a euro yen long per se, although that might be the right trade, okay? Because while I am constructive on the euro, I'm pretty constructive on the yen too. So I think you might see some more back and forth chop here. But at the end of the day, one thing I tell you keep an eye on, JZ, is this. Cool name, by the way. Is this. Momentum's coming into 40, and if this break above that 60 region is precursor for a larger correctional, I wouldn't even say correctional, for a larger advance here, or a larger turn in price for euro yen, then I'd want to see that 40 level hold support on a closed basis. So I'll be watching this today to see if that 40 level holds and see if price is able to maintain 33.50 support on the scalp basis. I'm not sure when the last time I updated this. Yeah, on the scalp basis, also highlights one key thing. The opening range for the week. Remember, we made the gap. We like to use the gap range in and of itself as a directional bias indicator. So we didn't quite fill the gap. We did break the gap lows, but remember, just because we're breaking the opening range low or the gap low doesn't change the fact that support is right there below. Key 50% retracement. So even though we did clear the gap to the downside, it wasn't an operable play. You had no trigger in price. And on that merit, you still need to wait for the break of this massive range. I know it's a 200, 250 pip range, guys, but for me, on a trade like this, where I'm constructive the euro and constructive the yen versus the dollar, it might be worth it just to sit on the sidelines and let this pan out. Near-term bearish invalidation level is right here. Any longs you take, again, you're going to want to try to take it against the session lows on a minimum. Momentum is holding 40 as support after failing at 60, so the momentum signature has gone neutral here. Let's see what it looks like on the 5-minute. I wouldn't say you got a long trigger on this, JZ. I mean, I think you probably were looking at this, and it does look like a break, test of support and holding. So yeah, I would be looking higher. But that's, really shallow trigger, A, and B, the trigger extremes are both under 60 and above 40. So I don't know if you want to actually use that as a viable trigger. And not only that, price action hasn't cleared any range. Remember, the trigger doesn't mean anything unless it clears a range in price as well. So here's your Asia highs, or excuse me, here's the opening range high. Where's the London open? Here's your opening range low for London. Opening range highs right up here. Even the US opening range, we haven't really even cleared anything on that trigger break. So no, I wouldn't say it's an operable trigger on that one. JZ, hope that offers some clarity on that. Oh, I'm sorry, you're talking about the euro dollar. I saw yen for a reason. Euro dollar long trigger. Yes, you did. Let's see what the 30 looks like. We might have just missed that one. Okay. I'm going to wait. Remember, like I said, most of those scalps that we took yesterday were panning out of the break in about 10:30, 10 o'clock as the opening range sets and breaks. So we might have missed that trigger already. Remember, your stop needs to be against the low, so it doesn't matter what the triggers do if you can't put a conviction stop against the low. Um, yeah, that was the trigger that we highlighted earlier. That was it, guys. No worries. There's going to be more opportunities as we move on into the U.S. session. It says right on. Thanks for the clarification. Anytime, man. Anytime. Last but not least for Deepesh, we're over on time, my man. But here's sterling yen. Um, wow, you got the break. I didn't look at this at all today. You got the break, right? Remember, we were talking about this level specifically yesterday, 89.16 to 89.50 into 190.50 was a big region, but you look at the December highs, you're looking at 100% extension and the median line off the lows. Yesterday actually closed below that. So ever since yesterday, I said, the conviction was to look lower on sterling yen. See what the 30-minute looks like. Oof. And keep in mind, a downside break um, of a descending formation will typically be your biggest moves. So if the market is in a channel or a pitchfork to the downside and you see a break, typically that's going to be a massive move. If the market is in an uptrend or a channel or a pitchfork and it breaks high, it breaks higher, that typically will be the strongest leg higher. So if you're not already short on this one, I wouldn't be looking to do anything to add here per se. You're right in the middle of no man's land. Near-term support 85.35. I would put a soft target right here at this pivot, mimicking the lows for the highs for the initial May opening range, which we defended later in the month. So a soft target there right at 186. But yeah, it looks like full-on breakdown here. If you are holding shorts, this would be a trigger that would want to possibly take you out of that position. If you're trading near support, if we're down here on that trigger break, it actually might be a nice long entry for a scalp. Keep in mind that as of now, you're putting in some divergence, but we'll need to see the U.S. opening range give us a low or at least verify that this is a low. You have no way of knowing this is a low, so the divergence here means nothing. You need to make that reference point with a spike higher. So bearish sub 187.80, plain and simple on this one, Deepesh. Bearish below that level. But again, a pair where if you're looking at the relative performance on the session makes a lot of sense. I'm surprised I didn't draw my attention to this earlier in the session. Sterling super weak on the session, yen super strong on the session. Nice confluence play here. Deepesh says, I am short this. Thanks, buddy. I appreciate that, Deepesh. And nice job on that. Nice job. Look for that near-term support, like I said, right around 86, but below that, 85.35. Next 50% retracement, the entire range should be pretty big. All right. So, guys, again, keep in mind you have that FOMC minutes later this afternoon at 2 p.m. Eastern here in New York. We'll pick things up back tomorrow morning at 8:30 Eastern. And again, a quick reminder, the midweek strategy webinar did get pushed back till Thursday as well. So Jamie will be all ready for you guys tomorrow at 1 p.m. Till then, best of luck trading, guys, and we'll see you tomorrow. Cheers.